Hi, I'm Mike Capizzola, and you're watching Pink Diamond, the show where we help you find the diamonds in the rough of the pink sheet and small cap market. This week, we're looking into a very exciting space in the market and one which is growing rapidly: fintech. Now, when we think of fintech, we tend to imagine an app based startup staffed by computer nerds who want to disrupt the world with their product or service. But not every fintech business fits that stereotype. Computer Services was founded in Kentucky way back in March 1965 with a staff of just 6 and only 3 customers. Today, the business has more than 1,200 employees and 500 institutional customers spread across the globe. Their customers are banks and financial institutions to whom the company provides technology and support services across a range of financial and regulatory areas. These include card and payment processing, fraud detection and prevention, deposit collection, loan management, banking analytics, compliance, and risk management. In fact, the company is basically a one-stop shop for banking technology and processing. Computer Services hasn't been left behind by digital and mobile banking either, and offers banks web design and hosting, mobile banking apps for both consumer and business customers, as well as online account opening and account management tools. Computer Services is OTC listed, but it's far from a minnow. It has a market cap of $1.6 billion and annual revenues of just over $284 million. It pays regular dividends and has a 5-year dividend growth record of 105.26%. The firm has had 5-year earnings growth of 92.93%, and its earnings per share, as of its last report, was $1.91. With numbers like that, it's no surprise that the business has been attracting interest from Wall Street pros. TrackStar, our proprietary search tracking tool, has registered 202 separate searches for information on Computer Services made by 22 individual investment professionals in recent weeks. That level of activity puts the stock in the top 10 most searched for OTC tickers in the TrackStar database. Over the year to date, Computer Services stock has risen by 30.34% and is up by 21.70% over the last 6 months. However, the shares have been drifting lower more recently, down by 5.69% over the last month, for example. Perhaps because it's OTC listed, Computer Services has few institutional shareholders, yet the business is both cash and asset rich with very little debt on the balance sheet. To some extent, Computer Services has been hidden under a bushel. If the business was based in Silicon Valley rather than Paducah, Kentucky, it might enjoy a higher profile and fuller valuation. That may be what has got Wall Street traders invested in the name, because with a solid and long-established business, a blue-chip customer base, and an enviable record of earnings and dividend growth, Computer Services sounds exactly like the kind of company that a larger rival or private equity should be interested in. So let's watch this space very closely from here indeed. To find out more about our TrackStar IQ data, sign up for our free newsletter at investingchannel.com/trackstar. Small and micro-cap stocks can be high-risk investments, so before you make any investment decisions, please ensure you do your own due diligence.